Mr. Abdul Ammar Mun'am is results-driven Islamic banking professional with over 11 years of progressive experience in Sharia compliance, Sharia audit, and Islamic financial operations across reputable banking institutions. He is skilled in ensuring full compliance with Sharia governance frameworks, regulatory requirements, and central bank guidelines while supporting product development, audit reviews, and operational excellence in commercial and micro Islamic financial institutions. Sir, we are honored to have you with us today. Thank you so much for your time. Now, I would like to request you please proceed this training session from here. The floor is yours.
Bismillahirrahmanirrahim. Assalamu alaikum wa rahmatullah. And as I was informed by the Shagufta that some of our participants are from Dubai. So kaifal halukum, जो पाकिस्तान से हैं, आप सबका क्या हाल है? और हम इंशाल्लाह इस सेशन को लेके चलेंगे. So the topic of my presentation for you guys is the practical and operational aspects of Islamic micro, agriculture and rural finance. So first of all, we have to know the some insights from the World Bank Global Findex 2025 report. According to this report, approximately 1.3 billion adults globally remain unbanked. It means they have no access to the financial services provided by the different financial institutions. First of all, we have to know why these adults have not access to the formal financial services. The reasons are, first of all, the poverty. The second one is lack of nearby banking services. The third one is low financial literacy. And next is lack of trust in banks. Some individuals don't trust banks. They think that the banks and the banking windows use their money and pay less and gain more than the paying to the individuals. The next is very, very important element is that there are religious concerns regarding interest. Let me here mention that the interest is the concept which is not prohibited by the Islam only. All revelations and all, you can say, the divine guided books discourage interest. And the next one is the limited digital access. In this era, when we have fintech, and then we have when we have digital banking, but before this there were many you can say barriers. The one of them is the limited digital access, and the next one is the documentation issues in financial institutions. To address these number of you can say the global adults, there are many issues. One of is high application fee, the complex documentation issues. So summing up, by comprising all of these aspects, these huge number of adults remain unbanked. So in order to capture this market niche, this huge unbanked proportion, you can say, of the population, creates a major opportunity for Islamic microfinance, digital Islamic banking, branchless banking, mobile wallets, agri fintech solutions, interest-free rural finance. So by summing up all these channels, we can say that Islamic micro, agricultural, And rural finance refers to the Sharia compliant financial services designed to support low income individuals, farmers, rural households, and the small rural businesses, but without involving interest and other prohibited elements by Sharia. So, the major thing we have to know that in Islamic microfinance, there is not only the one element of riba or interest, but so many other valid sources and valid, you can say, elements which prohibited by Sharia, and thus the Sharia boards of these financial institutions, Sharia compliance department, product development, Sharia boards, and Sharia audits. These are all working to provide Sharia compliant solutions, financial solutions to these individuals. So the next point is what is commercial and what is microfinance? May I have some answers from participants? Please introduce yourself and tell me what is commercial banking and what is microfinance banking. Any one of you? Masood, can you ask the participants the same thing?
Yeah, good afternoon. Yeah, this is
Good.
Claire Chua. Yeah, so for commercial banking, this is normally to finance businesses for their working capital needs and long-term needs as well. While microfinance is targeted towards the smaller enterprises.
Okay. So how can we segregate between commercial and between microfinance?
Hmm. Actually,
To
for us, commercial is the general term. So it doesn't really distinguish into the size of the companies. For us, more microfinance is more of a subset of the commercial financing. So it covers, yeah, companies with a smaller asset size, smaller number of employees. There
Okay,
is a specific definition. Yeah.
to some extent, you are right. Let me add something that in different countries, the regulator, the central bank of the country, uh, permits the license to the microfinance with a, like in Pakistan, with a 3 million bucket. So every licensed microfinance institution or bank in the Pakistan can finance up to uh, 3 million, and nowadays it is going to 5 million soon. So in every you can say in every country, the regulator have the. So I was talking that in every country, just like in Pakistan, the regulator have some restrictions to the microfinance institution that they can finance, they can utilize the capital up to some certain level. That level basically mentions that this is the microfinance banking institution, and beyond the that limit, the you can say the start of the commercial banking institution uh, is going to be start when the central bank permits the commercial banks that they can finance up to maximum level. So uh, there is nothing special in microfinance and commercial finance, with the huge difference of, you can say, the financing bucket of any country, any country's central bank. So if it is in the bucket of microfinance, both are doing the banking, both are doing the financings, both are doing the, you can say, micro agriculture and rural finance. but their limits segregate. So the next point is, can you uh, mention me, or you can share the idea of secured and unsecured financing? I want this session as interactive. Anyone else? What is secured versus unsecured?
Assalamualaikum, everyone. This is Ammar. Secure financing basically based on some guarantee or some sort of leasing, and unsecured financing is based on social guarantee.
Okay, anyone else?
Yeah, hello, can you hear me? Hello?
Yes.
Yeah, Assalamu alaikum. My name is Rohi. Unsecured financing is where you don't give any collateral against the funding that is done, while secured financing is you put up some collateral against it.
Yes. The basic difference between the secured and unsecured financing is the submission of collateral. In many cases, uh, in unsecured financing, usually personal guarantees, guarantors, and things like that are categorized as unsecured financing. While in secured financing, as brother said, uh, some collateral is taken as the security against, you can say, to provide the financing services. Okay, as I am nowadays a part of a microfinance bank, and let me share you the I don't think so it is interested, yeah, you can say it is alarming that some microfinancial institutions, microfinance banks, and microfinance uh, banking windows, they opted for unsecured financing globally. But you know what happened to them? Just after some time, the guarantor and the applicant both are skipped from the city, and the commercial, you can say, microfinance institution is searching both of them. And if microfinance institution is successful to catch one of them, like guarantor, then guarantor simply says that no, the customer is not in my contact, so I cannot do anything. So here rise the question of the big risk to the microfinance industry is the credit risk. Okay, now what microfinance institution is switching from these institutions, that they opted for secured financing, which is secured by gold, which is secured by collateral, like documents of their land, like the, you can say, in agricultural financing, a passbook, which is the ownership documentary evidence of the land of the farmers. They keep all these things as collateral, so that this default risk or credit risk can be handled to it. I think you all guys got my points. So can we move next? Any question?
Uh, Please elaborate about the passbook concept.
Yes, in Pakistan, every country has its own legislations and regulations. In Pakistan, the government issues a book to the farmer, which mentions the ownership of that particular land. So the financial institutions keep this passbook with them until he will pay the principal amount and with the profit, and then they will return the passbook to the original owner. I hope I answered the question. Okay. Now we are moving to the basic principles, product and operational mechanism, and marketing strategies for Islamic micro, agriculture, and rural finance. Okay, first of all, although there are many basic principles of Islamic finance, but I categorized 5 of them. Then first of all is the prohibition of riba, as we discussed in the start of the session, that many unbanked religious and particularly Islamic customers, they don't opt for financial services provided by the banks due to the conventional banks, due to the very fact of riba. So we can talk riba on whole day, but a simple definition of riba is the kullu qardin jarra manfaatan fahuwa riba. Every loan which draws profit uh, and you can say is called as interest or riba. So every form of riba, interest, usury, is prohibited by the verses of the Holy Quran. Okay, let me add here that the definition of riba is not in the Holy Quran, while the definition was mentioned in the Hadith of Holy Prophet, peace be upon him. The next thing is prohibition of gharar. Okay, what is gharar? Gharar is basically excessive uncertainty. Uh, it is the element in the commutative contracts where one is getting something and other is also getting something. This element basically nullifies the contract, that if it is in excessive position, the buyer is unaware what he is buying, and the seller is unaware of what is he is selling. So in future, this element of gharar or excessive uncertainty, uh, this keep the both parties to rise of the conflict. So then the Sharia prohibits all forms of the contracts which exhibit a position of excessive uncertainty, which rise to the conflict. Then the other principle is asset-based backed financing. In Islamic financing, you cannot say that money is exchanged with the money. So there must be a asset into the transaction. Okay. Next is ethical and halal activities. While we are talking about the halal activities, it means that all those activities which is prohibited by Sharia, Quran and Sunnah, Ijma or Qiyas. You can say all those activities which are prohibited cannot be financed through Islamic micro, agricultural and rural financial institutions. And what is ethical? You can say any activity which is against the ethics, business ethics of the Islamic financial institution, or business ethics of the transactions which were provided by the, you can say, the Quran and Sunnah. Those are also not included in the in the list of the Islamic financial institution. Okay, the final part of this slide is that social justice and welfare. And particularly when we are talking about the Islamic microfinance, Islamic agricultural and rural finance, we are not just doing banking, but we are doing social justice and welfare. So one can ask, how welfare and social justice? So basically microfinance institution, you can say, targets those audience which is neglected by the commercial banks and the commercial financial institution. In start, we have discussed that they are unbanked, so they have no access to the financial services. As a result, concentration of wealth in few hands, uh, The other concepts are iktinaz, ihtikar, and the other you can say bad practices. So in order to keep these things out of the financial business model of the microfinance institution, to keep social justice and welfare as their one of the top goal. Okay, as we just discussed that the marketing strategies of the Islamic micro agriculture and rural finance, the objective is not only profit generation. Here, although microfinance institution earns profit, but their goals are also extends to the, you can say, financial inclusion, poverty reduction, poverty elimination, rural development, because their market niche is from those areas which are neglected by the commercial banks. As we have just discussed, the ethical financing and at large the community welfare of the country. Okay, to start next, may I have a question for last two slides? Okay. When the microfinancial institutions, Islamic agricultural and rural financial institutions, they came to into a picture, and then they addressed digital Islamic finance, which is, you can say, fintech revolution. They introduced mobile banking apps, branchless banking agents, digital wallets, KYC, know your customer. EKYC means digital identity verification. And the most important, as we know that artificial intelligence is now in practice, then they are also opting for AI based credit scoring about the customer. So what the result after these innovation, that this reduce the costs and reach remote rural population. As in start, we have discussed that many of them have no financial account or no have access to the financial services. The reason is that there are not branches and there are not, you can say, financial institution in the rural areas. So Islamic microfinance and Islamic agricultural finance and rural finance, these institutions opted for branchless, and now you can say also the regulators of the different countries. When I was when I am talking about the regulator, then that means that the central bank of the any nation. So they are providing basically the innovation to the financial institution that they opt, and this reduces the cost of the microfinance institution and also financial inclusion to the financial services. Okay, next is agri fintech platforms. The agriculture institutions basically opted for you can say new platforms integrated like crop financing, market price tracking, and weather forecasting, and they input supply chains. So as a result of these innovative steps, they basically now the farmers can now have access to the financial services, and also have the information in system. So comprising all these very facts, then the concept of blockchain and cryptocurrencies and Islamic crowdfunding, peer-to-peer financing, and these are all done by through community investment models. I think you will discuss on the second day the Musharaka based crowdfunding. So this helps the small farmers and the startups raise their capital without interest. The basic difference between the conventional, although they are the conventional microfinance and agriculture and rural, financial institutions. But Islamic, when we talk about the Islamic, so it is now the responsibility, not only the requirement but also the responsibility, dual responsibility, that they provide financial services to the farmers and the startups. Without all those elements we have discussed in previous slides, so comprising all these things in then Islamic crowdfunding, and this helps small farmers and startups to have financial services without the elements prohibited by Sharia. So, what was done by opting these services, these channels, you can say these modes of technology? Uh, yes, there is huge poverty reduction. When we talk about the poverty, some persons and some people say poverty cannot be eliminated, but it can be reduced. Okay, microfinancial institution basically they uplift those persons which are also already in poverty, but providing services to them, and they are now, you can say, reducing the poverty. They are basically, you can say, establishing the financial inclusion. They are including all those market niche which was unbanked and which has no access to the financial services, and now they are financially included. Okay, the next point is, you can say, the agricultural productivity. It is the main, uh, you can say, field of any country which is produces not only for the country but also now the countries are capable of exporting. The very important point is women empowerment. Microfinancial institutions not only focus the men population but also women empowerment, and they design the programs and products which is specially for women, and in financial inclusion they have a major share of women empowerment and women inclusion in the these programs. Okay, the next one is food security. I think no one is unaware of post-COVID scenario, and you can say in many countries, when we talk about Sudan or in countries where food insecurity is the big question of the nation. So when the Islamic microfinancial institutions, agricultural institution, and rural finance institution start working, they provide, when they are ensuring the agricultural productivity, they also make sure the food security to the country. Okay, the last but not the least, that ethical economic growth. Okay, Islamic financial institution, the basic point from the conventional is not only the provision of you can say the financial services to any customer. Islamic financial institution makes sure that every financing product or every customer must have ethical, Sharia compliant, and useful demand, so that can be fulfilled by the financial services of the Islamic microfinance institutions. We have talked these points in short, but now we are going to discuss these in detail. So, may I have question if anyone can ask about my previous slides?
Yeah, Assalamu alaikum. I'm Arshid from Akhwat, Pakistan. In the previous slide, as you are elaborating very important points about the Islamic microfinance with agri inclusion, that is the most important point was you described women empowerment. Uh, as a whole is also we are also working with farmers at large scale throughout the country. We have observed that in Pakistan and especially in South Asian countries like India, Bangladesh, and surrounding countries, women have no land ownership record. So how can we address this issue, and how can we include in financial microfinance the women in these areas that have no record of the ownership, and especially issue is coming when we want to collect the collateral, land record collateral and related issues. So please you can explain this issue.
Okay, very good question. And answer of this question splits into three parts. First of all, many women have gold. Okay, if they don't have the gold, the husband of the women have land. If both don't have gold, or you can say the land, then this question is basically addressed in the next slides. That this question basically opens the ways to uh, establish, and you can say the to ask the political regimes to empower women through different training programs, and they can add these women into I saw a picture yesterday where you can say comparison of women of 4 or 5 countries were exhibited. In one country they are doing work, in second country they are doing sewing school, and in some country, but while in discussing in Pakistan they are asking for help. So very basic, and you can say the market niche, and to empower women and to include them in services, we have to train them. And here is the question uh, we can address through family lending. But my dear brother, in experiments of recent 4 or 5 years, when we you can say we facilitate women through family lending or financing or other sources, after some time we know that this will be default risk, this will be, you can say, the credit risk, and the financial institution goes to the loss. इन दोनों सूरतों में मेरी जो आप बात समझ रहे हैं अखुवत के पॉइंट ऑफ व्यू से, कि हमें जहाँ पे वीमेंस को एम्पावर करना है वहाँ पे हमने उनको ट्रेन भी करना है, वहाँ पे हमने उनके कोई ऐसे रास्ते निकालने हैं जहाँ पे उसकी फैमिली, भाई या जो बहनें हैं या उस गांव की कुछ औरतें हैं, कम्युनिटी बेस्ड जो बैंकिंग है उसकी तरफ हमें जाया जाए. ओके, I hope I answered your question. So these are the 4 points which are very important, and I think this is the last point before the break, that how fintech, crowdfunding, peer-to-peer networks, and cryptocurrencies came into the picture of the microfinancial institution, the agricultural institutions. So these 4 innovations are reshaping modern financial systems, especially Islamic microfinance, agricultural finance, and rural finance, by improving access, speed, transparency, and inclusion. I can remember when I was studying Islamic banking and finance at university level. The time the knowledge and the access to the services and the comparison shows that now even a child have the access to an Android phone. Now the women can use the Android phones in the rural areas. And even then, in rural areas, a person with very low education and without any expertise in, you can say, IT, they can use cellular phone. So the difference between the 10 years back and now, the basic difference is the adoption of the technologies. Okay. When we are talking about the fintech, the financial technology, as you know that the fintech refers to the use of digital technology to deliver financial services such as payments, lending, savings, insurance, and investments. And the key fintech application in Islamic rural finance, number one is digital payments, which comprises the like mobile wallets, QR payments, branchless banking agents. Okay, the next one is the digital lending, which is instant micro loans, AI based credit scoring, and paperless financing. So, opting for these, you can say the information technology tools. The next is agri fintech solution, which comprises of crop financing apps, weather crop advisory systems, and when we talked about 10 years before, they don't have such apps, they don't have such financial, you can say, technology solutions. And this inclusion of information technology into the financial services of the microfinancial institutions, basically they bring a huge revolution. And now the impact of this fintech solution is that they reduces the cost of banking. Then they expands to the rural outreach, which was the very big issues in start. Now it improves the financial inclusion and speeds up the financial decisions for the financial institution to provide the financial solution to the lenders. Okay. The next one is crowdfunding. As you know, the crowdfunding is a method of raising funds from a large number of people through online platforms. But in Islamic perspective, when we talk about the types of crowdfunding, is one first of all is the donation based. Some organizations in Ramzan, especially, are they have in their business model that they ask for donations and they convert these donations to the you can say micro capital and microfinancing services to the lenders. Then the next is the reward based, small reward in return to the financial, you can say this is the non financial profit. It is the concept of isar or ajr, or you can say it is the sadqa jariya. Okay, the next one is the equity based financing, which is sharia compliant musharka, which will be covered by the you can say the trainer tomorrow. You can ask them about these concepts. And but the 2 points, then investor become partners in business and they provide their funds on profit and loss sharing model. So those funds can be utilized to provide financial services to the borrowers. Okay. The next one is the Karde Hassan crowdfunding, as my brother is representing the organization. The majority capital of this organization was, you can say, provided to the lenders through Karde Hassan model and Karde Hassan crowdfunding. Okay. When we are talking about the Islamic structure examples, then these are these three examples. Small farmers submit project from the countryside. Investors fund via musharka. Musharka is basically sort of partnership, and then profit shared based on agreed ratio, which was pre-agreed ratio. and the financial institution and the investors, they earn profit, and the amount is utilized by the borrowers to, you can say, the provide to utilize these funds to the financial services. Okay, this was the, you can say, the initial stage, or you can say this is the very basic model of the microfinancing, that peer-to-peer lending networks. When borrowers, you can say farmers, micro entrepreneurs, uh, are they ask directly with lenders which are sitting in the countryside of the societies, then what was, you can say, the basic fault of this model, when there is not without any traditional banking intermediaries, the credit risk and the default and the conflict arises. So, and the basically, the lenders in the countryside, they provide money to the uh, rural, you can say, borrowers, uh, with the amount of, you can say, interest, which is, I already mentioned that it was prohibited by Quran and Sunnah. Okay. Musharka based, what is Musharka based P2P? Investor fund, business ventures, and profit sharing interest, instead of interest. So by replacing interest to the, and let me share with you the basic difference between the conventional financial institution and Islamic financial institution is the process, and the result may be the same, but the process defines that what is the Islamic legality of the contract, and what is the outcome of this contract. If the process is same, then we cannot add any of this transaction, that which is, you can say, either it is conventional or it is Islamic. Okay, we have discussed the Hassan model. Borrower basically post financing needs, investors evaluate the projects, and fund pool digitally, business is financed, and after financing, the return distributed ethically and according to the pre-agreed ratios. So by summing up all these models and all these modes, we can say that the benefits of these are the faster financing, lower cost than banks, as we discussed in start, that the application fee and hidden charges and this and that, they basically excluded the rural borrower from the financial services. But now, when the, you can say, the micro borrower is facing with the lower cost, so it enhances the financial inclusion. Okay, here is the direct, you can say, participation of investor is involved, and by, as this is a risky, you can say, market niche, so they increase the transparency after every incident. When I talked about the borrower side, like guarantor, unsecured financing, such events basically teach microfinancial institutions to enhance transparency, uh, to strengthen the product development, and to execute the credit risk with very uh, intense, you can say, evaluation. Okay. At last, before going to the break, I think these are the risks which are, you can say, the microfinance institution, agricultural institutions, and you can say the rural financial programs and rural development programs. There are the default risks, as I mentioned, that the instart that the microfinancial institution is facing default or credit risk due to many reasons. Then there is a risk which is known as fraud risk globally. People don't, you can say, opted for the legal, ethical activities, but they opt for fraud, and you can say these risks basically not only limitize the microfinancial activities, but also strengthen the microfinancial activities, because after every such activity, microfinance institutions uh, are you can say adopting the policies and steps in their product development and financial services. Okay. One of the you can say in some countries there is a lack of regulation in some countries, and the final one is the information technology asymmetry. Then because now when we are talking about last 5 years or 10 years, digital banking or fintech and cryptocurrencies and blockchains and all of these, you can say that these are the major areas uh, of a successful microfinance institution is have to adopt these latest modes, and they are you can say adopting some of them, and they are coming with the solutions. Okay, before going to the break, I think Masood, we can have some question, and then after break we will start the next mode of financing. But I want question majority of the from the majority of the participants. Up till now we have discussed the points. You can ask any question, like I hope I can address.
Okay, thank you so much, sir, for the insightful presentation and the first session. Dear participants, now we are open to question of the first session. And if any one of you have any questions, please, you are appreciated to ask by raising your hands, or you can also write in the chat box so that we can answer the questions. Any one of you.
Thank you so much.
Okay, please, one by one, sir. Mr. Adnan, please, you can proceed.
Thank you so much. I just want to learn some the concept reward-based crowdfunding. Please, can you explain it again?
Okay, as I talked that some people and in some organization they are providing funds to the some microfinancial institution in return of nothing. They are just providing funds in the form of donations, sadaqah jariyah, sadaqah nafla, sadaqah wajiba, zakat, and these donations to the microfinance programs to utilize the money if to address the microfinance the needs of the microfinancial borrowers. I hope
Then
I
what
answered
is
this.
the difference between donation-based crowdfunding and reward-based crowdfunding?
Okay, obviously, as the name suggests, when we are talking about the reward base, the investor asks for profit, and then he agrees to contribute his investment.
Sorry, please again.
Okay, dear, I am mentioning in return base, the investor puts his funds in the capital of the microfinancial institution to earn profit, not only swab, or you can say and sadqai jariya or something else. They simply say that we will uh, add money to your capital, but tell us what your organization or what your business model is will be given will give return back to us in financial terms.
But in the slide, you mentioned that there is no financial reward.
As I mentioned, in some cases, some persons donate money and they don't ask for financial return. So reward based, okay, the financial in terms of investment, the reward is profit. But in terms of donation, or you can say such kind of investment also pays rewards, but in form of you can say swab or reward in hereafter. So this is basically financial reward, and you can say the non-financial reward. Okay, anyone else?
Okay, yeah. Next will be Mr. Arshad. Sir, please, you can ask.
Thank you so much. First of all, I want to appreciate your first session, very thoughtful and very meaningful, and especially I learned very new things. So my question is about the crowdfunding, and in crowdfunding, you explained that different resources of it. So you also included the cryptocurrency. So my question is about this crowdfunding term. How can we help from cryptocurrency for in crowdfunding for Islamic microfinance, and especially in perspective of Sharia compliance, and especially compliance with regulatory authorities in Pakistan? Please.
Okay, very good question again, Arshad Bhai. Question is the inclusion of cryptocurrencies. First of all, in Pakistan, as you know, that cryptocurrencies are not regularized by the national relevant institutions. I informed in my slide that in some countries these are being you can say included in the financial business models. When we talk about the Islamic microfinancial system, obviously, first of all, it will be regularized by SCCP or Central Bank of Pakistan. Then the Sharia board of the microfinancial institution, they work on the legality, Islamic legality of these currencies to include. And then after approval, or you can say after the judgments of the Sharia boards, they can give the final judgment about whether we can include these cryptos in our model or not.
Okay, so dear
Anyone else?
participants, yeah, anyone else have any question you may ask now before we leave for the break? So I think, sir, there are no more questions. So we should go on the break, and then we'll proceed after 15 minutes according to our agenda.
Okay, sure. Thank you. So, dear participants, tell me, or you can share in the chat box that what is a price? How can we define price of anything?
The price of any items are composed of course, the cost and the margin, or the price is the
Okay,
amount. Yeah,
okay.
that's the
Anyone
amount.
else? Thank you. Anyone else?
We can say that price is something, value of something, or the amount of money that buyers pays to purchase a product or service.
Okay.
Yeah.
Anyone else?
Yes, good afternoon. This is George Arenas from the Philippines. Yes, in terms of lending, the price of loans are priced by taking into consideration the cost of funds the interest rate for the deposits plus a certain spread. Then that comprise the price of lending.
Okay. Anyone from Dubai? The first answer of, I think, Jamaica, jewel is most appropriate. The cost, the price of anything. I did not ask any financial price. I basically financial transactions price. I asked basically a normal price of anything of you can say it is comprises of two things: cost plus profit. Okay, before going to the next session, these are the summary of the Islamic contracts which are being used in the commercial banking as well as in microfinancial institutions. So my part of today's session is about Murabaha, Salam, and Istisna. So I asked the question that price is basically the sum of cost plus profit. Okay. When we go to the market and you can say we purchase anything, the shopkeeper does not segregate the cost and profit, you can say, to us. He only shows the price. If the only price is described, then this type of contract in Islamic Sharia is known as musawma. Okay. So if the seller segregates the price and the disclosures that this is the cost on my product or service and this is the profit, then this arrangement is known as Murabaha. So Murabaha is basically being used majority of the portfolio of the microfinancial institutions, even then commercial financial institutions as the major mode of finance, you can say. Basically, it is a contract where the institution or the seller, upon request by the customer, purchases an asset from the third party, usually a supplier or vendor, and resells the same to the customer either against immediate payment or on a deferred payment basis. Okay. So Murabaha is basically which is being used in the banking sector. It is called as Murabaha to the purchase order. In further discussion, we will be able to know why it is called as purchase order. Okay. It is a basically bunch of contracts. Many contracts are completed in steps and ultimately suffices the financial needs of the client. Okay. The sequence of their execution is extremely important to make the transaction Sharia compliant. Okay. You can say Murabaha comprises of many contracts, but the legality of the whole Murabaha contract also depends upon the all legalities and all formalities of all those contracts which are being the part of the Murabaha contracts. Okay. Can anyone answer what is funding stage in Murabaha and what is financing stage in Murabaha? Or let me ask this question after some slides, and then you may people will be able to answer this question. Okay. Now we are going to discuss the product composition of Murabaha. Basically, the first stage is the promise stage. And the promise stage also splits into two different scenarios. Stage one for Murabaha financing. Client approaches the bank for financial facility through Murabaha. So here is the contract which is master Murabaha agreement is signed and facility approved. The second stage of this promise stage, or you can say the second part of this promise stage, client and bank signs an agreement to enter into Murabaha agreement. So, which was discussed just a minute before, that the master Murabaha facility agreement is being signed between bank and the client. Okay. The third part of the promise stage is Murabaha financing. For his client submit the purchase requisition to the you can say bank, that these are the you can say the products are these are the things I need to purchase from you through Murabaha. Okay. Then there is a agency agreement. Basically, microfinancial institutions makes the client as agent of the financial institution to go to the market and purchase goods on bank's behalf. Okay, so this all is done through the agency agreement. Okay. The second stage for you can say if Murabaha financing is agency stage, and in the whole scenario, the client goes to the market, purchase the goods he required from a vendor or you can say from a person he wants to purchase, and then he discloses to the bank that bank gives money to the supplier through client's account for purchase of goods, because as the client is the agent of the financial institution. Okay, then the you can say the next stage for the Murabaha financing is that client purchases goods on bank's behalf and takes their possession. So up till now, the client is basically the bank's representative, and he holds the possession of the you can say those required goods by the client, and in further you can say steps we will see how the possession and the risks returns to the bank. Okay. When the client purchases goods and takes possession from the vendor, now the transfer of risk, you can say, is transferred to the bank. And I asked the question why it is called as Murabaha to the purchase order is now clear to you, that because it is being carried out through vendor and the through purchase order, which is basically client. So basically bank don't need those goods. Basically the client needs those goods for his use and for his commercial purpose. So due to this fact, we say that this is Murabaha to the purchase order. Okay. The next stage is execution of Murabaha. It is the A part of fourth stage, that client makes an offer to bank to purchase the goods from bank. Okay. The client is asked that you can make an offer to purchase goods from the bank. Then the bank stage B for Murabaha financing, bank accepts the offer and sale is concluded. So now what will be happen? There will be Murabaha agreement plus transfer of title to the client. Now the possession and you can say the risk to transfers to the client. Okay. Stage 4B for Murabaha financing that client pays agreed price to the bank according to an agreed schedule, usually on a deferred payment basis, which is also known as Bay Mojal. Okay. The general mechanism of Murabaha is, you can say, we will discuss that the customer approaches the bank. As a summary, I am telling you, the customer approaches the bank with the request for financing. The bank purchases and receives title of ownership from the vendor, and the bank makes payment to the vendor. The bank transfers the title over the customer upon payment. As I mentioned in start of this session, that basically Murabaha is the transaction where the seller or the institution discloses the cost and also discloses the profit, that how much profit he will receive from the vendor. Okay. The customer make payment upfront or on a deferred payment basis. So this is the whole mechanism of Murabaha that you can say that is being carried on in the banking institutions. Now, before going to the next contracts, I must stop here and ask your questions about Murabaha or anything which you are uh, about to ask anything about Murabaha. I am here to answer you.
Okay, Salam alaikum.
Walaikum.
Yeah, I have some question regarding Murabaha.
First of all, I ask, what is Murabaha?
Okay, Murabaha is in the part of kind of a loan that the customers or the bank or the microfinance it is a buying service or some things for the customers or the clients.
Okay, now you can ask your question.
Okay. Regarding the Murabaha, if a bank excuse or microfinance excuse with a Murabaha with the agency, where the bank appoints the client to purchase some assets directly from supplier at what expect second as is a legal ownership risk transferred to the bank. And how do we document this to avoid some paper transaction, this the type of conventional, especially loan?
Okay. Next question. You have, I think, two or three questions.
Yeah, I think one question is I'm in Ethiopia, especially we have as our topics more or less we are learning on especially in Islamic microfinance regarding especially agriculture, but we have most, especially in eastern part of Ethiopia, we have some pastoral society too. How we can address them is their lifestyle are also movable from one place to another. Can we address them? Especially
I cannot
pastoral.
get your second question. Please repeat it.
Okay. I'm from Ethiopia, and especially in eastern parts of Ethiopia. And most of our societies are pastoral and semi-pastoral society. They have a cattle and their lifestyle lived and based on this cattle. Uh, we have no more agriculture here in eastern part of Ethiopia. How we can raise them in such Islamic microfinance?
It is, you can say, this question can be addressed through a separate session, that
Yeah,
how you can at the end I will share my personal email and contact. You can ask, and I will share some business models as well with you. You can people, you personally, or you can start the microfinancing. The first question is uh, how the risk is, you can say, shared by the yes, when the risk is with the client as an agent and there is no negligence from his side, then the microfinancial institutions, they opted for the Islamic insurance, which is known as takaful, and through these precautionary measures, uh, they basically mitigate the risk. Okay, I have two questions in chat as well. Uh, Brother Ismail Nafiu asked that how Murabaha can be used in the another Islamic financial mode. Yes, this can be used the business models are, and the through product development are the Sharia advisors, and through the, you can say, the central banks legislations. Murabaha can be used as, you can say, for purchases of the products needed by the customers. Okay, what when it is expected to of the bank to start requesting the customer for repay if the deal was agreed to pay immediately? Okay, is it immediately after he transfer to ownership to the customer, or the bank will wait he start to make profit from the goods bought through? Very good question. uh, okay, usually the customers came to the bank, uh, is already the shopkeeper, or you can say the RAZ, the uh, utilizer of the products. So before the provision of the Murabaha facility to the customer, they basically through credit scoring mechanisms and other things, they basically analyze whether this particular customer is capable of uh, having the product of Murabaha, and what are the expertise of his business, and obviously when the risk beyond go to the customer, the ultimate user, obviously bank can ask for the profit. The interesting thing, may I share with your consent, that during COVID, some financial institutions which are providing microfinancial services to the clients, as you know, the whole scenario of the business shattered. The business was closed, and the lockdown and smart lockdown and the other restrictions. So the banks basically not only uh, forgoes profit, but some banks also has provided some time to the customers, that when they will start again, they can provide, you can say, the installment to the financial institution. But as we know, throughout the globe, when one facility or one relaxation is given to the specified person, The other person may become habitual of not giving the installment without lame excuses, with lame excuses, and you can say with the intention that he will not pay the amount to the the financial institution. So all merits and demerits are there. Any bank can face from the customer side. Okay, any other question in chat box, or you can ask through voice note.
Yes, I have a simple question. As you explained very well the Murabaha product, but it was totally in perspective of banking sector. And in Islamic microfinance, the difference between banking sector and Islamic microfinance sector is huge difference. First, the customer difference. Banking customer have different perspective, and Islamic microfinance customer have different perspective. So, being a practitioner of Islamic microfinance, we have some hurdles in doing Murabaha product with especially small farmers. They have limited knowledge about financial products, and especially have no knowledge about Islamic financial products. So Murabaha, when we want to enter in the Murabaha contract with small farmers, there is huge challenges and hurdles and bottlenecks we are facing. So how can we eliminate these challenges and these issues? Can we alter this product in perspective of especially Islamic microfinance sector and especially for the small farmers? Can you support it and explain it about this issue and challenge? Thank you.
Okay, brother Arshad, as I mentioned earlier, I am the part of a very, you can say, vital department of a microfinancial institution, which is a bank. And Murabaha will be Murabaha like in commercial bank or in microfinancial institution. Okay, the concern you have raised that how can we utilize this very concept of Murabaha to the end user. Okay, according to my knowledge, as I am also, you can say, last 4 years, I have visited many customers in different parts of the country, and maximum portfolio of the bank comprises Murabaha. Okay, customer training and staff training. Here is the question of what you are talking about is very important. You have to mention customer that this is not the a loany transaction. This is not a interest-based transaction. First of all, staff should be aware of the legalities, technicalities, and you can say the uh, important ingredients of the contract. Then the customer comes to the branch of the bank. The staff should train and inform the customer about the contract. So yes, this is the question where, uh, as we discussed, that in microfinance institution there are the factors of like fraud or default risk. So in microfinancial institution they use secured Murabaha financing, which is usually backed by gold, uh, backed by collateral, the documents of the land, or agricultural passbook, and I think obviously there is a chance that the staff maybe cannot guide, but the whole product is, first of all, the product development of the institution. They tested it as a pilot run. The Sharia compliance department, Sharia audit department, and the Sharia board. The people are looking. Then I can share two examples with you that in one case, a customer came to the bank of the any bank, XYZ. Then he asked that I want to purchase the animals. So basically, Murabaha, he was requesting the Murabaha for livestock. Okay. What happened that that the bank, when bank transfers the amount to the uh, bank in the account of the customer did not purchase the animals. So one of the Sharia auditor on his visit in the field, he asked the customer, what did you uh, done with your you can say obtained money? And the customer said that I have not bought any animals because I have also already animal, and amount is with me. And then the Sharia auditor approaches the Sharia board that the Murabaha transaction basically was not carried out for the subject purpose. You know what was the decision of the Sharia board, that they asked the you can say the relevant department to charitize all the amount, because now it was non-Sharia compliant element. And I think the any bank cannot anytime you can say every time pay you can say the charity. Then what will they do? They will focus on the Sharia compliance of the transaction, the training of the staff, and the knowledge sharing with the concerned customer as well. I hope I answered your question. And the second example, may I share? I should share, I think, here again, without mentioning the name of the bank. I say a person came to the branch that was needy of Murabaha financing. The credit file of the particular customer mentioned Mr. Zaid and Bakar or Mr. ABC as a vendor. But after when the audit of the particular branch was conducted, it was observed that the amount was transferred from customer to another person other than the vendor. So the Sharia auditor also again asked the Sharia board and the Sharia advisor that in this scenario, what do you say? He again mentioned that this will be charitized because the vendor and the subject matter is not known to the bank, so we cannot say that this Murabaha transaction is you can say Sharia compliant. So in order to summarize these things, that there are some lapses, you can say there are some shortcomings, and there is a need of training of staff and the customer. Then you will be able to perform pure Sharia compliant transaction of Murabaha. And in the scenario of microfinancial institution, I think, and according to my little experience, uh, it is more riskier than the commercial banking Murabaha. So then it is, if it is riskier, then the microfinance institution is more, you can say, more, mm, the best word I can say here, more, you can say, he is curious about the transaction, that because micro borrower is not known to the ingredients or legalities, or you can say the Sharia compliance. But as an institution, we should make it possible that we can provide the Murabaha Sharia compliant financial solution to the borrowers. Brother Arshad, I hope I answered your concern and your all questions. Okay, may I have any question? You can write in chat box. Okay, again we are going for a break for 15 minutes. 15 to 20 minutes. We will get at 2:15, and then I will present my rest of the presentation. But at the final session, I require maximum question from your sides, so that I say that you people personally getting benefited through these concepts. Okay, thank you. We will meet again after 13 minutes now. Thank you. Okay, dear participants, as I discussed that we have discussed the sale transaction of Murabaha. Now, before going to discuss the other two sale transaction like Salam and Istisna, first here we discuss the some basic rules of Bay means any transaction. Bay is an Arabic word. So basic conditions for a validity of a sale in Sharia are three. Number one, the purchased commodity must be existing. So anything which is not existing, we cannot have a sale on that particular thing. Okay. The second one is the seller should have acquired the ownership of that commodity. If a person meets another person in the market and he said that I sold you that particular car to you, but he does not have the ownership of the particular car, then Sharia says that this is not a valid sale. The number third point is the commodity must be in the physical or constructive possession of the seller. Okay. In Sharia perspective, possession is of two types. One is physical, and the other one is the constructive possession. Okay. What is physical possession? Physical possession is anything which is physically possessed by someone. As I can give example that if I have my cellular phone physically in my hand, I can say that I have a physical possession of the cell. And if I have the uh, in some scenarios that the thing is not available in physical condition, but the possession is also with the seller in forms of document, in forms of, you can say, in forms of in terms of ownership. Then he can say that physically it is not available, but the you can say the ownership documents, through those documents I have the constructive possession of the particular object. Okay, if you people understood these 3 points, and if you don't have any question, then we are going to you can say some two sales basically, which are exceptions to these three valid basic rules of the transaction. Those transaction or contracts are known as Salam and Istisna. These are only two exceptions to this principle we have just discussed, that here in these transaction, although these are sales transaction, but ownership and the physical or constructive possession, and these at this time of sale, these are the exceptions to the principles of Sharia. Okay, first of all, we are going to discuss the application of forward and future sales. Okay, after prohibition of riba or interest, they could not take interest based loans. Therefore, it was allowed for them to sell the agricultural products in advance. The permissibility of Salam under the Sharia was an exception to the general rule that prohibits the forward sales, and therefore it was subject to more strict conditions than the other types of sale. So we can say that although these transactions are the exception, but there are more strict conditions to keep them as Sharia compliant transaction. There are strict conditions which should be, you can say, followed in order to keep them Sharia compliant. Okay, the permissibility of Salam under the Sharia was an exception to the general rule that prohibits the forward and future sales, and therefore it was subject to more strict, as I discussed that these are the strict compulsions. Okay, first of all, we are going to define and have the basic concept of the Salam. First, we discuss the whole transaction Salam, which is being used in agricultural finance, in microfinancial institution, agricultural and rural development programs. Okay, purchase, it is basically purchase of a commodity for a deferred delivery in exchange of immediate payment according to specified condition. We will discuss those specified condition as we discussed in previous slides, that although this is exception to the general rule of the transaction according to Sharia, but when we will you can say conduct this transaction, we will follow some other specified conditions which will be discussed in upcoming slides. Okay, Salam is also known as Salaf, Bay as-Salaf, and the Bay as-Salaf or Bay as-Salam ma quddima min as-samni alal mubi, which is, we have mentioned in English, purchase of commodity for deferred delivery in exchange of immediate payment according to specified condition. Okay, therefore we can say that Salam is a contract whereby the seller undertakes to supply some specific goods to the buyer. Okay, number one, at a future date, and in exchange of an advance price fully paid at the time of the transaction. So here we are going to discuss some background and the purpose of the Salam. The contract of Salam derives its legitimacy from the Quran, Sunnah, and Ijma. Hazrat Abdullah ibn Abbas radiallahu ta'ala anhu said, I declare that a Salaf, that is Salam contract in which the commodity is guaranteed for future delivery, has been permitted by Allah and read, O you who believe, when you transact a debt payable at a specific time, put in writing. And the next is the reference of this verse of Surah Al-Baqarah. Okay. It is reported that Hazrat Abdullah ibn Abbas said that the verse is a revelation for the particular purpose of making Salam permissible. Okay. In another, you can say, hadith, Hazrat Ibn Abbas radiallahu ta'ala anhu is reported to have said, the Prophet, peace be upon him, came to Medina and found that people were selling dates for deferred delivery for a duration of 1 or 2 years on a Salam basis. The Prophet, peace be upon him, said, whoever pays for dates on a deferred delivery basis, that is on Salam basis, should do on the basis of the specified scale and weight. So, according to this hadith, you can say the legitimacy of Salam or Salaf, we can have the insight of these transactions from these Quranic verses and the hadith. Another hadith, version of hadith, it comes that whoever pays on a deferred delivery basis should do so on the basis of a specified scale, weight, and date of delivery. And in brackets, there is a reference for this hadith. You can people further studies through AI or through any you can say reasonable resource. Okay. Now we are going to discuss the wisdom behind the permissibility of Salam. Why Salam was permitted and how you can say the wisdom is explicit through the very concept of Salam. The basic purpose of Salam was to fulfill the need of cash of to the small farmers who needed money to grow their crops and feed their families till the time of the harvest. So you can say the basic wisdom and the basic purpose is to fulfill the need of those farmers of the rural areas who need money to grow their crops and for fertilizers and you can say all about their agricultural produce. They can use Salam as a mode of finance. Similarly, to facilitate the traders who used to export and import of different goods from one from and into Arabia. In the classical era of Salam, you can say that it was also used as the for export and import of different goods. Okay. Salam was beneficial for seller like farmers or traders as he received the price in advance, and it was beneficial for the buyer as he used to get the commodity at lower price than the market. So we can say that Islamic Sharia or the Islamic commercial laws not only secures the you can say the interest of the purchaser, but also you can say uh, also uh, it is also securing the benefits and the rights and duties of the seller and purchaser, both parties A and B. Okay. Now we are going to discuss the rules for a valid Salam contract. Salam contract is subject to some conditions. These conditions will be discussed in relation with the following four basic components. now you can have the insight of the Salam contract. The Salam contract basically comprises of the four basic elements, or you can say the components in Salam contract. First of all is the buyer, and the Rabbus Salam, the owner of Salam in Arabic. The second one is the seller. The Arabic of the seller is Muslim Ilai. The price, which is known as Rasul Mal Salam, and the final is the subject matter, which is known as Muslim fee. I am repeating again, the Salam basically comprises of four basic elements: buyer, seller, price, and subject matter. And the names of these four components are also mentioned in Arabic. And now, in order to going to validate the Salam contract, some conditions we have discussed in first slide of the Salam, that these conditions should be met and should be, you can say, considered in order to legitimize the Salam contract according to Sharia. Okay. First of all, the Rabbus Salam, the buyer, the seller, buyer, that it is buyer. It could be any person or a party who could become a seller or buyer in any valid transaction. Why it is mentioned seller or buyer at the same time? In upcoming slides you can see in one transaction one is a seller, and at the same time in the other transaction he is the buyer of the transaction. But first of all, it is the Sharia requirement of the Rabbus Salam that any person who can become the seller or buyer, he is adult, he can have the insight of the financial matters, so he can be the Rabbus Salam of the Salam contract. Okay. The second one is the price of Salam or Rasul Mal Salam, that is the conditions pertaining to the this very concept of the price of Salam. Price in Salam contract could be anything which could become the price of any valid sale contract. Every price which can be considered as price of any valid sale contract can also be considered as you can say a valid point and valid ingredient for Salam contract. Therefore, the price could be in the form of cash. First of all, a cash should be as a price of the Salam, tangible assets, and usufruct, provided that two conditions are met. All these things can be mentioned or can be considered as price of Salam while considering these two conditions. First is the price with respect to the subject matter must not be a thing which must be delivered on spot. That is, gold is purchased in exchange of silver, or a situation of barter arises where deferment has been prohibited by Prophet, peace be upon him, e.g., wheat is bartered for barley. These are two scenarios where we can say that if these conditions are not met, then we cannot consider them as the price of Salam. Okay. The more condition that price must be paid on spot. It cannot be as deferred, because the person who is going to avail this transaction in microfinancial institution, basically he needs money to grow his crops, to utilize the money for the fertilizers, or you can say for tube wells, and ureas, and the other, you can say, the ingredients for the agricultural produce. Okay. The next is the salam price should be specified and quantified. Any ambiguous price cannot be considered as the salam price. Okay. Now we are going to discuss the condition pertaining to the subject matter of the salam. As we discussed in our earlier slides, that Islamic microfinancial institutions not only doing the ethical financing and Islamic financing. Uh, Here is this, you can say, the example that how Sharia basically focuses the legitimacy of the transaction by considering that the subject matter. We cannot provide salam for the agricultural produce of the grapes, which are going to be used for the making of alcohol, beer. Okay. Similarly, some other prohibited agricultural produce, for we cannot use salam as mode of finance for that, being an Islamic financial institution. Okay, subject matter of salam could not be a particular commodity. Someone cannot, you can say, that I will provide you the mangoes of that particular crop or field, because he is bound to provide the mangoes of the quality which is basically mentioned in the next point. The quantity and quality mentioned in the contract is the basic point of the salam contract and the subject matter of the salam. So the quality and quantity of the subject matter should be very clearly specified. But we cannot you can say the particular commodity, because through rains or through any, you can say, insects attack, or you can say through floods, that particular crop can be that particular, you can say, the garden of the trees of the mango can be destroyed, but the person is uh, bound to provide the mangoes of the quantity and the quality mentioned in the contract. He can provide from another tree garden of the trees of the mangoes. So in order to keep this thing in the contract, subject matter of salam could not be a particular commodity. It is the basic, you can say, the condition. Okay, number the third point is the subject matter of salam should be a commodity which remains in the market right from the day of contract till the date of delivery of the subject matter. So any person cannot ask for a salam contract for a any agricultural produce which is not available in the market, or unseasoned, you can say, commodity which can be provided against the salam contract. Okay. The exact date and place of delivery must be specified in the contract. While Islamic microfinancial institution providing salam contract, they make sure that the exact date and the place of delivery must be written in the agreement, and there is no ambiguity should be the in the provision and in the place and the about the date of the availability of the agricultural produce. Okay. Basically, the it is the unilateral promise to purchase or sale. Before maturity, bank can take promise to purchase from a third party. After taking delivery, bank will sell the same commodity to the promisee, and he will be bound to purchase the same according to the his undertaking. This promise should be unilateral. So these are the technicalities of salam, that although bank can uh, take promise from a third party, but this promise is not a bilateral. This should be a unilateral promise. Similarly, on the other hand, customer can also take a promise to sell as agent of bank to third party when bank will authorize to sell. In this process, risk of asset will remain with the bank till sale. So I have asked the question in before Murabaha. Now it is the time to address that particular question, that what is funding stage and what is financing stage. In Murabaha, when customer is obtained money from the bank to purchase some particular asset, that stage and those all contracts are within the ambit of funding stage. But when risk transfers to the purchaser, then you can say my one of the participant also asked the question about this. Then when the transaction begins, now the financing stage is, you can say, in action and is applicable there. So same in Salam contract as it is sale contract, here is also funding stage and financing stage. In funding stage, basically these stages describes the risk and the liabilities and the, you can say, the associated benefits and associated liabilities to the concerning parties. Okay. When we are down to the concept of salam, there is another concept of parallel salam. Parallel salam is also a type of salam to finance agriculture operations, production of food items, and to finance craftsmanship and small producers by supplying them with inputs of production as a salam capital in exchange of some of their commodities to the market. And the final is to finance the commercial and industrial activities. So in salam, when one party came to the second party, the second parties can also have a parallel salam in order to provide, but with some you can say condition and restrictions. This parallel salam can be you can say can be executed. Okay. After the execution of salam agreement with one party, buyer or seller executes and other salam agreements with third party. So what conditions are for salam parallel salam are: there must be two different and independent contracts. Okay, brothers and sisters and the participants, I may I share here that in the whole ambit of the Islamic law of contract, the legitimacy and the legality and the shariah compliance of the transaction purely depends upon the every aspect and condition for every involved contract. So in this contract of sale, and while we adding an other contract, it is mentioning that there must be two different and independent. One contract should not be dependable on the other contract. These two contracts cannot be tied up, and performance of one of should not be contingent on the other hand. It is in Sharia, it is known as bayatan fil bay, or you can say their contract is dependent on the other contract. Okay. Parallel salam is allowed with third party only. The second most important condition for parallel salam is, you can say, the it can be done only with the third party. A person cannot perform a parallel salam with the person which is already the party of first salam contract. Okay. Application of salam and parallel salam: if the seller enters into another separate salam contract with the third party to acquire goods of same specification which corresponds to that of the commodity specified in the first Salam contract, so that the seller can fulfill his obligations under the contract, then this second contract is called parallel Salam. And in Arabic it is known as al-Salam al-Mawazi. Okay, I am reading again. If the seller's party A enters into another separate Salam contract with the third party, party C, to acquire goods of same specification which corresponds to that of the commodity specified in the first Salam contract, so that the seller can fulfill his obligation under that contract, then this contract is called as parallel Salam. Let me share here an example. Usually globally, when one person provides his you can say the residence on rent basis, usually contract of this lease, usually in many cases it is mentioned that the person cannot further provide this property on rent to any person. If you get this point, then now come to the parallel Salam. Person A has the contract of Salam with person B that you provide me the agricultural produce on June 30, 2026. Then person B is conducting another agreement with person C that you should provide me the agriculture produce so that I can provide them to the party A. So I think with these examples you can now have the easily understanding of the parallel Salam. Okay, as we have discussed in the Murabaha agreement, sale of Salam goods through agent or agency agreement, if the bank has no expertise to sell the commodities received under Salam contract, then the bank can appoint the customer as its agent to sell the commodity in the market. So when bank ask person B for Salam contract, then bank can also nominate person B to sell his commodity in the market as an agent, and then to market a third party subject to this Salam agreement, and the agency agreement are separate from each other. So again, we are talking about the Sharia legitimacy and Sharia compliance of the transaction. We can say that this agency agreement and the Salam agreement, these are not contingent to each other. So the next is the price must be determined in agency agreement on which the agent will sell the commodity, but if the price is increased, the benefit can be given to the agent. Okay. You can, I think this is not so difficult point. You can understand that if the price increases due to any factor, the benefit can be given to the agent, not in the term of price. You can say the any relaxation or the benefit can be given to the agent. Agent is the party B of the contract. Okay. Now, if you remember the Murabaha contract, where we have discussed that Murabaha is the basically sale of any commodity where seller describes cost and profit margin to the purchaser. So now in this scenario, in Salam case, a bank can sell the Salam commodity to the seller of Salam on Murabaha subject to following terms. Again, dear participants, you can see that every transaction and every contract is bound to follow some conditions, and it is not something like this. It is just the change of nomenclature, or it is just the put ear from this side or those side. No, you can clearly see here that the Salam agreement and Murabaha agreement should be independent. Again, these should not be contingent to and the free will of the parties. The you can say the consent of parties in all contracts of Sharia, there should not be any coercion, there should not be any you can say pressure, or you can say their bribery or anything. If the contract is conducted with the free will of the parties, then we can say that this contract is done with the mutual consent of the all parties. Okay. Murabaha will be executed after taking the possession of Salam goods. Murabaha can only be conducted in this scenario when the possession of Salam goods, and here we possession mean, as we discussed, as possession, physical possession of the Salam goods. After the taking the possession of Salam goods, Murabaha will be executed. Okay, bank shall assume the risk of loss between taking delivery and execution of Murabaha. Now, my brother asked the question in the Murabaha. I think he can understand now that bank shall assume the risk of loss between taking delivery and execution of Murabaha. So we can say that Islamic financial institution or Islamic banking uh, is the banking where the risk of loss is occurring, can be occurred, and you can say the bank is assumed to have the risk of loss. Okay. Bank cannot take undertaking from seller of Salam that he will purchase the Salam commodity from bank on Murabaha basis. Again, these all are the independent and free, with free mutual consent. Then we say that the Salam contract is done with the Sharia legitimacy and the you can say the Sharia compliance of the transaction. Okay. Before going to the next level, we are now we are now discussing the associated risk in Salam application for Islamic microfinance institution, agricultural institutions, and the rural development programs, that before delivery, goods will remain at the risk of seller, because it is in the possession of the seller. Okay. After delivery, risk will be transferred to the purchaser, as we discussed in the Murabaha contract. Now you can see that when the ownership or the risk of or the you can say the responsibility of transfer is being transferred, then the risk of the transferred good is also transferred accordingly. Okay. Possession of goods can be physical or constructive. We have discussed it already, that possession can be or in terms of physical possession or in constructive possession. Transferring of risk and authority of sale and utilization or consumption are the basic ingredients of constructive possession. There is a risk of authority of sale, you can say. If there is a constructive possession, we can say that the transferring of risk of authority and the utilization or the consumption of the sale of Salam, it is, you can say, the prime responsibility of the parties involved. Okay. If Salam good are delivered before agreed dates, purchaser can refuse or accept the uh, goods as per its need. If party A deliver goods before the agreed date, then purchaser is, you can say, free to either he can refuse or he can accept the goods. Okay, so in order to mitigate or handle these risks and the risk management in Salam application, the Islamic insurance known as takaful may be obtained to cover these type of risks. So we can say that risk management is allowed in Islamic transactions, but with the, you can say, with the restriction that not with the conventional insurance. It should also have the Islamic insurance known as takaful, and takaful can be opted for the mitigation of these risks. Okay. While we are going to talk the revoking of the Salam contract, after the Salam execution of Salam agreement, it cannot be revoked unilaterally without mutual consent of both parties. When both parties are involved, as we have discussed, as it is a contract, although it was done with the mutual consent, but cannot be revoked unilaterally. It should be revoked with the mutual consent of both parties only. If one party is willing to revoke, he cannot revoke the contract without the mutual consent of the other party. Okay. Contract of Salam contract, Salam cannot be drawn up on the basis of Murabaha sale. For example, by determining the price of Salam on a cost plus profit basis. Okay, this is because the subject matter of Murabaha should be something. Okay, now it is the discussion is you can say the about the subject matter. In this is because the subject matter of Murabaha should be something already in existence. Its cost should be known and should be owned by the seller before conclusion of Murabaha, so that a profit margin be added to that. While in Salam, contract can be concluded on subject matter that will be produced or purchased after execution of Salam contract. I think you people getting this point that both have the difference in subject matter. So okay, before going to the last topic of the may I have the question regarding Salam contract?
Uh, Good afternoon.
Good
Yes,
afternoon.
good afternoon. This is George again. Um, does Salam contract applies to banks? No, right?
Yes, dear brother, continue.
Yeah, my question is whether Salam contract can be used in banks because as I understand, it's a contract between a buyer and a seller only. So please correct me if I'm wrong, but my understanding is that it can't be applied to banks. It can't be used in banks, right? Unlike with Murabaha.
No, brother. It can be applied in banks as well, just like Murabaha.
Okay.
Microfinancial institutions which are providing agricultural finances basically depends on this contract of Salam. So bank can also use
Yeah.
Salam contract
Salam.
like Murabaha.
Okay. Thank you for clarifying.
Okay. Anyone else?
I have two questions. I have written in chat box if you can read.
Okay. No. Answer is no.
Why?
Because in Salam there should be any product which is to be produced. In personal financing, what is going to be produced and which is not known to the you can say the microfinance institution.
In Salam,
And
we need to deliver some goods like wheat when the
yes,
season will
yes,
come. So it is not
yes.
necessary that I am producer of a wheat, then I can do Salam. Is it?
Then I have discussed the contract of parallel Salam. If you are not the ultimate producer of the agriculture produce, you can have another contract with the person who is the actual producer of the agriculture produce. You can get from mm, that person, particular person, and then you can sell to the buyer.
So if I am a financial institution, I purchased 100 kg or 100 tons of wheat. I need to ensure my sale in future. So why I can't able to do the parallel Salam with the trader or with the floor mill to secure my sale?
Okay. If can you repeat this? If you are a bank,
Yes, if I am a financial institution and I have purchased 100 tons of wheat, for example, I need to ensure my sale on time. Can I do parallel Salam with a floor mill or a trader that I will provide you 1,000 tons of wheat at particular
first of
date?
all, brother, uh, bank is not in need of to produce. You can say any agricultural produce. Just like bank is not willing to purchase car. Basically, this is the requirement and the need of the customer, and the customer came to the bank that I can produce the specific agricultural produce, but I don't have money. So bank said that okay, I can provide you the finance on Salam basis. You can produce, then sell on my behalf as an agent, and then you can return the money with profit, which is you can say the question you are mixing with the parallel Salam. The person who came to the bank, he can have the parallel Salam to another farmer that I am not the expert of producer of the mangoes or wheat or any agriculture produce, but you are the person. So if you provide me the cultural produce in before the 31st June, 30th June, then I can sell to the in the market, and then I can share the with the you can say the financial institution, which is basically agricultural microfinance institution.
My question is regarding we are doing Salam in Ahwat, and in last season we purchased the wheat on a higher rate, but when the times come, the delivery dates come, we bear loss. So can I cover my this risk? To cover my loss risk, I can advancedly sell the wheat to a flour mill or someone else.
No, you can opt for takaful, Islamic insurance, for this risk, that if the before the mentioned date, if the price goes down, then there are the Islamic insurance companies who provide the takaful coverage, that so that the financial institution may not bear the loss, or the may not pose to the risk of the loss.
Okay, thank you so much. Thank you.
Welcome. Okay, Rashid Bhai is with me, and many participants which I think did not ask a single question. Joel Dealing, Rizwana, Anjum, Wajid Ali, Sugra, Rashid, Anwar, Shamsu, Hassan, and Ammar. Must write your questions in your notepads and at the okay. At the end of the session, I encourage if any one of you have at least one question.
Hi, Abdul.
Ji,
Yes.
hello.
Hello. Who should acquire the insurance? Should be the seller, right?
Repeat. Your voice is
Who should
very
ac-
slow.
who should acquire the insurance? The seller,
The financial institution.
the FI. Okay.
Okay.
Thank you.
If there is no question now, we are moving towards the final, last but not the least. You can say it is the another sale transaction which is known as istisna. Okay, the word istisna basically it is derived from sana, Arabic word, which is meant to the manufacturing of any or construction of the any subject matter. Okay. Definition of istisna: it is a contract of sale. We have basically today discussed the all three contracts which are sale contracts. First one is Murabaha, second one is Salam, and now the final one is Istisna. It is a contract of sale of specified items to be manufactured or constructed with an obligation on the part of the manufacturer or builder to deliver them to the customer upon the completion. Okay. As we have discussed in the Salam contract, here in Istisna, there are also some basic terms or elements of this contract. You can say these are the basic components of the Istisna contract. First one is seller, which is known as manufacturer. Okay. Second one is buyer or orderer, which is known as al mustasni. Third one is the subject matter, which is basically the manufactured commodity, and in Arabic it is known as al masnu. And the last one is the price, which we have also discussed in the Salam, and it is saman al istasna. Okay. There are four parties or four components of the valid istisna contract. One is manufacturer, the second one is buyer or orderer, number third is subject matter or the manufactured commodity, and the final one is price. Okay. Now I suggest you people to, after having this training session, keep in touch with these terms. In second day, you will also learn the mudarba, musharka, diminishing musharka, or maybe you can have the ijara as well. Uh, the after having so many years of learning these terminologies and these contracts, even then I am sometime puzzled with the concepts of these contracts. So first of all, you have to know what is the core difference between the istasna and the salam. Istasna is similar to salam, as in both sale contracts the commodity is transacted before it comes into existence. As we have discussed in the first slide of the final session, that basically Salam and Istisna are the exceptions to the due to those principle which is uh, compulsory, which are compulsory for the valid sale transaction. Okay. uh, what are the differences between these two transactions? That the subject matter of istisna is always a thing which requires manufacturing, while subject matter of salam may be anything which fulfills the salam condition. As we have discussed in salam, that it may be it may be concerned to the production of agricultural produce of like wheat or any fruit, or you can say any other agricultural produce. But while in istisna, it is involved uh, construction or manufacturing. Okay. Just like salam, the condition of istisnas are the pertaining to the al-masnu, which is subject matter or manufactured commodity. The subject matter of istisna is always a thing which requires manufacturing. Already produced thing cannot be the subject matter of the istisna contract. Okay. The subject matter of istisna could not be an existent and identified capital asset, as I discussed, which is already discussed, which is already available, which is already produced. uh, it cannot be, you can say, the part become the subject matter of the istisna contract. Okay. I can discuss more details in according to Sharia compliance legitimacy, but I think in order to grasp all the today's session, we have discussed the basic, you can say, um, basics of these concepts. I hope I can make things in very layman language, so that every participant, either he is practitioner or either he is student, he can have the insight of these contracts. So now the time is the time of, you can say, questions and answers. I can repeat all slides. I can I can provide more details if you have the question. Otherwise, I will consider that you can also have my email address. Uh, you can write me in email, or you can have a WhatsApp short message, short audio on this number. In far future, I will be available. But for now, I encourage every one of you that must have at least one question. I hope
Hello.
you people.
Yes. This is Claire. I'd just like to request, would it be possible to get a copy of the slides after this so that we can review before our session tomorrow, especially for those who are not very familiar
Yes,
with the terminologies?
yes, yeah, it is the common, I think, question, or you can say the common point I have received in chat box as well. I hope you will, you people will receive uh, the slides of the session of today's session. Any question? Anjum, how does Islamic finance minimize uncertainty error in istisna contracts? Obviously, Islamic financial institutions are the, you can say, the, um, not doing for the first time. They after every case they are, you can say, um, well aware of the uncertainties and the I think Shagufta has shared with you people the glossary of Islamic banking and finance, and yes. Okay, any other question?
Hello. Hello.
Adnan, you can have chat GPT for that particular hadith. You will get the reference of dates, inshallah.
Hello.
Hello.
Yeah, can you hear me?
Yes, Rohi, you can ask.
Yes, sir. Yes, Mr. Abdul Ammar, thank you so much for this nice presentation, and the topics which you have covered were quite extensive. As been asked that if we have the copy of the slides, we can go through it. In the meanwhile, we come forward for the next session tomorrow. We can revise it. Second is my question is, like Istisna and Salam, the two great products of Islamic banking. How can a common man or a small medium enterprise get access to it in other parts of the world? So, who are those financial institutions you're referring to, or financial entities with whom we can contact and get this arranged? Thank you very much, sir.
Please repeat final part. For which services?
For these products which we have studied today, how can a common businessman or small medium enterprise can access this, to clarify this, which financial institution, like you were saying, financial institutions which provide these products, we can
Okay.
refer to have.
Okay, brother. We are in the era of information technology and artificial intelligence and the Google and this and that. In every country, one can, you can say, one can have the insight for those Islamic financial institution are the financial are the windows which are providing Islamic banking services for okay. Can you hear me? Okay. Uh, Joel asked that, hi sir, what happened? Uh, okay. What happened if delivery date is not met and the specified condition are not fulfilled? Yes, then you can say that it nullifies the contract, and I have discussed one in one slide that if before and after specified date the party A, which is basically buyer of the, he is free to opt or free to deny, because uh, party B is only you can say party B is only bound to provide the subject matter on the specific dates. Okay. The organizers are sharing you the different links. You can have copy paste in your file, word file, and you can download these books and these glossaries for future reference. And you, as you have asked that how do Islamic banks use Salam, I presented the process as the microfinancial institution or Islamic financial institution. This is the process basically which is being Murabaha works in real estate business. For real estate, or you can say for a property, there is another contract which is known as diminishing musharaka, which will be discussed in tomorrow's session, inshallah. So you can have insight with another moderator or trainer, you can say, which he will talk about the diminishing musharaka, and you can ask also me about after this training. I can if I can answer your question, I will answer it. Okay, next question.
Hi, this is Claire again. Yes, I just wanted to clarify. This Islamic financing is quite new to me, so I just like to know. And I am in the lending sector, so I understand there is no concept of loans and interest in Islamic financing. That is why what we are studying right now are types of sales, because sale contracts, because that is how funding or financing is done in Islamic finance. Is that the correct concept, basic concept?
Okay, as I have discussed that the basic difference between the conventional banking and the Islamic banking, or conventional microfinancial institution and the Islamic microfinancial institution, is the concept of the process. Okay, conventional institutions basically they sells money on the price of interest. Okay, in Islamic financial institution there is no concept of loan. Even then they are not using these terms in their products, but why they are doing financing. So loan is just a giving money on interest, while financing requires, as we have discussed, many agreements, many contracts, many, and they have to meet many, you can say, terms and conditions in order to fulfill the restrictions by the Sharia board and Sharia advisors and the Sharia advisory committees. So here are the sales contracts, here are the lease contracts, here in Islamic banks there are here are the partnership agreements uh, mm, instead of the conventional products, which are you can say not only the making the possible the concentration of wealth in few hands, but also exploits the customer needs. I hope I answered your question.
Yes. Yeah, quite understood that.
Sir, one more question. question I have, the question which I asked earlier was which institution. You said we can use ChatGPT and other search engines to get those information. But my question was like, what role can Al Huda play in getting access to that? Because this is a complex operation where there's a lot of contracts and things that are agreements that are done. So can Aluda give us some support and guidance regarding this? And second question, sir, is that in commercial banking, we have trading instruments like LCs, DLC, Usance LC, SBLC, which more or less functions like what we are learning here. So how different is these Islamic finance products from those trading instruments in commercial banking? Thank you.
Okay. I think Shagufta will second me after my. They produce a diary in which information of Islamic financial institutions worldwide mentioned there. Shagufta, is it right? You are producing right now? Masood or Shagufta listening me? So from Al Huda, you can have those resources, or you can have that particular document, and you can have the access to the financial institution. There is the second one question is the LCs, about LCs. Yes, in Islamic banks also there are LCs, but Murabaha is involved in LCs as well. And there is not a conventional insurance in LCs, while there is Islamic insurance which is known as takaful. Shagufta, can you hear me?
Yes, brother.
Shagufta, can you share? Are you people now issuing the diary? You are issuing some time in which you have mentioned Islamic financial institutions worldwide.
No, currently we are not publishing, but we are planning to publish it in 2000 at the end of the 2026 for the year of 2027. We are planning for that.
Okay, but till then, you can. He is asking basically how Al Huda can help them to get access to those financial institutions which are providing Islamic financial services, etc.
Yes, if any participants have such a required for this information, they can send an email to me, or even they can WhatsApp me. Definitely, I will respond them according to their request.
Shagufta, it will be great if you can share with us the information here in this forum. Because what usually happens is that once we write email and get into communication with these entities, we don't get that much of response, and there's not much of traction that is there. So I that's why I was like asking, because in this era of information, availability of information, all these things are available on internet as well. So if Aluda can act as a bridge for us to avail these kind of facilities with the relationship, I don't know, you might be having with these financial institutions, can it act as a bridge for us so that we can communicate with them effectively and get our responses? Thank you.
Yes, brother, I can. Thank you. I can just communicate with you through email, and after that, after this training, I will also try to communicate with you through WhatsApp regarding this.
Hi, Abdul.
Yes.
Yes, George again. In terms of accounting, how do we record income derived from these contracts? Do we record it as interest income as well, similar to that of regular loan transactions?
No, brother, basically, uh, mm, there are some auditing and organizations for Islamic financial institution. One of them is AOFI, accounting and auditing organization for Islamic financial institution in Bahrain, which provides accounting standards for Islamic financial institutions, which are you can say separately deal each transaction from loany transactions. So you can write AOFE, accounting and auditing organization for Islamic financial institutions, accounting standards, and you can have insight about the accounting standards for the for the transaction of Islamic financial institutions.
I see. So there's a different accounting approach for
Yes, yes.
Islamic transactions. Thank you, Abdul.
Mm. Any other
Um,
question?
yeah, this is Claire again. Maybe
Okay.
to put things into perspective, in conventional banking, the counterpart of lending is the deposit taking, right? So, in Islamic finance, if the loan equivalent are the sales transactions, what would be the counterpart for the deposits, or what would be the source of the funds that will be used to purchase these goods on the
Okay.
financing side or funding side?
Okay. On the, you can say, the liability side, the same institution is also dealing with the current accounts, with the, you can say, the term deposits, with the saving accounts, and the equity of the financial institution as well. Those funds
Okay.
basically from liability side
Mm.
are utilized in the asset side for these
Mm.
for the provision of these transactions.
So for these deposits, do the funders also get returns? And in what form is that, if there is no concept of interest in Islamic finance?
Yes,
Or
this although this will be discussed tomorrow in tomorrow's
okay,
session, but
okay.
shortly speaking, that they have profit and loss arrangements on mudarba basis, and you
Mm,
will have the insights of mudarba in tomorrow's session, and
okay.
with the with weightages and you can say the expected profit rates, the customer can have the profit, and there is no fixed profit in Islamic financial institution,
Mm,
and they offer profit rates, you can say, on the previous month profit accrued on the same product. They said that this a profit can go beyond this rate, and can also it can go down to this profit rate. So
mm,
in Islamic banks, is no concept of the fixed profit rate. In even in the in terms of term deposits, they don't offer any fixed profit rates.
okay.
Hope
Okay,
so.
understood.
Uh,
Thank
any
you.
question?
Looking forward to the discussion tomorrow, further discussion on this tomorrow. Thank you.
Okay. For tomorrow, maybe I will be not be with you people. So I am with you for today. You can ask about my presentation, or you can ask any question regarding Islamic financial institution. Okay, brother Arshad Halil.
Thank you so much. I have also written in my comments. I want to ask about the usher. What will be, who will be the responsible for the usher? Is the financial institutions like bank or the customer? Please.
Uh, Dear brother, first of all, I am not Mufti, or even then, I just can share my opinion. It will be with the person who is actually holding that agriculture produce at that time. But you know how many persons are paying zakah or ushar, you know very well. And the in commercial transactions, how much people, you can say, they are following these things in their daily routines. You know better than me. Okay, any question? So, Shagufta, what do you say? I asked again and again. I think there is no question. If still any one of participant can ask me, I have shared my um,
Sir, thank you so much for the very insightful presentation and the engaging session with the audience and our learners. So, dear participants, before ending up today's session, we are open to questions. If any one of you have any question related to today's presentation, so you can ask, or we will end the session and start tomorrow. Anyone with the questions? So I guess, Mr. Abdul Ammar, we don't have any questions from the audience. Once again, thank you so much for joining with us today and your insightful presentation.
thank you. Thank you.
Thank you.
Thank you, dear participants, for joining with us today. And we will continue with tomorrow's session according to our agenda, share to all of you. And looking forward to have a very insightful discussion tomorrow as well. Thank you so much.
Thank you so
Thank
much.
you.
Thank you.
Thank you. Allah Hafiz.